Welcome back to Banking on Composable, where we talk about the future of banking technology, and hopefully it's in a way that doesn't feel like watching paint dry. I'm your host, Cassandra Stumer. Last episode, we talked about the basics of Composable. If you didn't get a chance to check that one out, it is linked in the description box down below. But now that we've established what it is, you might be wondering, why? Why Composable? How will this impact financial services? And why are organizations like Blend making such a big deal about it? Well, it all comes down to a banker's most important goal, keeping your customers happy, right? And bonus, it can make your life easier too. In today's episode, we're going to sit down with Craig Focardi from Celent. Celent's a leading research and advisory firm focused on technology for financial institutions. In this interview, we're going to chat about composability in banking software, why it's needed, why it hasn't happened yet, and what the future holds. So Craig, thank you so much for joining us today. Welcome to Banking on Composable.
Yeah, great. Thanks, Cassandra. It's great to be here, and it's great to be on Banking on Composable because it's a real hot topic in the retail banking and lending industries today, so a very timely topic.
If you could just give us a little bit more color on your background and how you got into financial services, we'd love to hear it.
In terms of how I got here, I actually started my career literally one block up the street at the Federal Home Loan Bank of San Francisco. What they do is they provide financing to the savings and loan industry and now to other types of banks as well. And so I worked in economic research there. And then I worked in the mortgage insurance industry just a couple blocks south of here in finance, strategic planning, marketing, and product development. And then spent some time the other way across town at Wells Fargo Home Equity, and then was a CMO for a couple of technology vendors, which is sort of how I became an industry tech analyst, which I've been doing for about 20 years now.
Oh, great. So and you were a San Francisco local then. You've been here a long time.
Yes.
Great.
For sure.
Yeah. So, and you've been in this, in the banking industry and in tech for decades. And right now we know that banks banks, credit unions, financial institutions, they're all facing similar challenges. It's sort of retaining customers, building deeper customer relationships, as we know. In your view, what can banks do at the moment to stand out from the crowd, and especially in this moment where everyone's clamoring for deposit growth?
Yeah, great question. Everyone knows that customer engagement is the number one thing that retail banks and retail lenders need to do, but you need to do it better than the competition in order to differentiate yourself and serve the client. And so you also want to have personalization. In lending, there are a number of systems that come into play. There's data in the loan servicing system, third-party data, and so the customer experience is certainly about how you automate that customer engagement, but also how you bring that customer information into that process. And that's where composability comes in. It creates the flexibility that organizations need in order to customize and personalize that customer engagement and help lenders differentiate themselves from others.
Right, yeah. Everyone's talking about differentiating. Everyone wants to have the best and most personalized customer experience. And what's holding everyone back from not doing it today, from not offering like an Apple account opening experience?
Yeah, a couple things are holding organizations back, and part of it is the legacy technology that they have. But a lot of financial institution back offices are pretty complex. There's a lot of legacy technology there. There's a lot of technical debt that needs to be maintained. They know what they want to do, but doing it can be very expensive and very time-consuming. What composability does is it makes that easier and faster and oftentimes less expensive in order to retool and rebuild those customer experiences.
So it's the hard-coded legacy experiences that's making it difficult, right?
Yeah, as opposed to the hard-coded client-server systems or mainframe-based solutions. Composability is really built on loosely coupled, componentized solutions, right? And so if you think about that, oftentimes people use the analogy of Legos as building blocks, and that's a good analogy. But one that I like a little bit more is if you think about actually a racing car, and the Indianapolis 500 was just last month, and I watched a little bit of it, and then when we were talking about this topic, I thought of an Indy Car making a pit stop, right? And
Love that.
Yeah, and so a pit stop has to happen in 7 seconds, right? They got to take 4 wheels off, change the tires, put them back on, fill up the tank with gas. And they actually have re-engineered that process and applied both hardware and software technology in order to make that happen. It takes a second to jack up the car. It takes 2 seconds, literally, for 4 people to take off the lug nuts and the tires. They fill up the gas tank, 2 more seconds to put the tires back on, another second to put it down, 7 seconds, and they go. And so if you're late doing that, the competition's going to get ahead of you. And same thing for lenders. If a new product comes out, they don't need to roll it out in 7 seconds, but it might take them 7 months today, right? But if you can shorten that with composability down to, let's say, 7 weeks or less, you're gonna stay ahead of the competition and win the race.
Yeah. And so it's sort of the back end. It's not just the front end that we're changing. It's like, if you use that analogy, it's some of these back end processes that need to change and get more efficient as well, which Composable can help with.
Yeah.
So we're talking a lot about composability in general and how it can solve the challenge of speed, like in the Indy Car analogy, which I love. But what other benefits do you see composability? Where does it come in solving these other challenges that banks and credit unions are facing today?
Yeah. 2 or 3 different areas. I know Blend has been focused on mortgage lending, but is more broadly in consumer finance these days. And so composability is useful for financial institutions that are themselves diversifying more into home equity lending or auto lending or consumer finance. Oftentimes you can reuse some of your solutions, such as a digital point of sale solution, in different areas of the business. You don't necessarily want a solution that's built on a different underlying code base. You can reuse parts of it, more easily integrate it and customize it for, let's say, home equity lending versus mortgage lending. And so that's a big part right there. And that's both front-end customer engagement as well as integrating to back-end loan origination solution.
If you have decided, for example, you're a bank, like, we need to get into home equity now, what should they be looking for in a composable platform?
Yeah, that's a great question, because in the old days with hard coding or utilizing other programming language that were not composable, a lot of it was custom code and it was very expensive to update and change. A composable platform, think of it as what they call a low-code or no-code solution. And so you're taking together building blocks of functionality, you're integrating them. There might be a platform with a very modern graphical user interface for the programmer, in the same way the retail consumer has their customer experience, the programmer has a better experience there. And they'll use a low-code platform to put together the different building blocks of call-outs to a credit pull, importing customer data, building the workflow, maybe integrating a document to that, and just doing sort of drag and drop as they build it and test it. And so that's really critical in a composable solution in order to create and maintain those solutions over time.
Right. Yeah. And you've been a champion of better technology, of course, in banking for decades. But as you mentioned, banks are sometimes slow to adapt. Do you think now it's time where we're going to see some of these technological shifts? We're starting to get into composable architecture. Do we foresee that happening in the next 5-10 years, now that if you make an investment, for example, in some composable technology and you're seeing revenue come in, is that going to shift faster?
Yeah, absolutely. I mean, Celent research, when we go out and survey financial institutions, shows that cloud computing is one of the top IT spending areas to invest in, and composability is part of that shift from on-prem to the cloud. So that's a big part of it. And I think we're really at an inflection point in the industry now in a number of ways. So I think the next 3 to 5 years and beyond are going to be a lot different from the last 3 to 5. I mean, the first big issue is the fintechs that have come into the industry over the last few years have impacted traditional lenders and shown them what's possible, have forced them to raise the bar. And now with higher interest rates and lower volume, everybody's competing for fewer loans in the market. And so how are you going to keep up and capture your share? Well, building those solutions better, faster, and cheaper, and building the customer engagement is what's going to get you there. And then I think the last thing to think about are these big tech firms, Apple, Facebook, Google, Amazon. We've seen them come into the payments area, and some of them are getting into the lending area as well. Right now it's more in the credit card and personal loan area. But they're moving up market as well, looking at auto finance, mortgage, and home equity. And so lenders can be as good and better as those organizations to defend their turf. And I mean that geographically as well. Those big tech firms are nationwide, and so you don't see them coming because they're not in your local market. But you can build those solutions that can compete head-to-head with them.
Thank you so much for being here and chatting with me today, Craig. I really appreciate it. This was an awesome conversation. And we do a little fun thing here. We just like to ask our guests, what do you do on a busy day where you are, constantly transforming the way that financial services are for the future? What do you do to just compose yourself? We call it compose yourself. What do you do to just relax after a long day?
Yeah, well, I need to relax a little bit during the day to get through the long day, for starters. And, I do that, with some short, brief, power walks. So I get up, stretch, walk around, take the dog out sometimes. And so that gives my mind and my eyes a break from the screen and from Zoom calls and all the rest. So I think that's a big thing. Probably the other thing is, if you think about composability in terms of enhancing what you've got, I've been, on these walks listening to podcasts, Blinkist podcast on tech advancements, ChatGTP, industry developments and all that. And so I'll recharge my batteries and add things to my client engagement, that way. And then, so by the time, I get to the end of the day, I'm still composed and stay that way. So.
Yeah, you were doing a walk and learn. Good for you. That's a great one. Awesome. Well, thank you so much again for being here. We appreciate your time, and we hope to see you again soon. Thank you again to Craig for a really great conversation. And now it's time for our new segment, Connect on Composable, where we answer questions from the comments section. And we have one here today. Are there any limitations to composable technology that banks should be aware of? It's a really great question. And Craig did touch on a few of these challenges just now, but a lot of it comes down to cost and interoperability. Financial institutions already have legacy systems in place, and of course, you're probably still paying for them. So bringing in any new technology adds cost. There is the consideration of implementation, organizational change management, and the challenge of getting all these systems to work together. Another consideration is ensuring that every part of your tech stack meets your security and compliance standards. That's something that luckily we're going to tackle in our next video, so stay tuned. But that's it for this episode of Banking on Composable. Don't forget to subscribe to our channel down below. If you'd like to see more content like this, please drop us a like. It really helps us out. And for more information on composable origination, click the link in the description down below or visit us at blend.com. See you next time.